Whether you're just starting out or maybe you have 10, 20, or 100 employees, business credit cards can add a ton of value and make life a lot easier. In today's video, we're going to look at 7 reasons why you might want to consider them. Big favor before we dive into everything is to give this a thumbs up to help with the algorithm. And if you are new to the Ask Sebby Business channel and you want to level up your business, then consider subscribing. For this, we're going to look at 3 different levels, starting with the early game when you are just starting up your business, to the mid game, and then to the late game. Even though some of the categories might seem similar, they are different and kind of have different benefits. In the early game, one of the big benefits is building out your business credit history. All you need to do is get business credit cards under the business's name, use it responsibly, and pay it off. The idea is that long term, it helps you establish and build that history. If you are running as a sole proprietor and plan to keep it that way, then maybe less impactful. But if you do plan to scale up your business, maybe as a C Corp, then it can be helpful to grow a lot faster. It's one of those things that are easy to ignore, but can pay a lot of dividends in the long term. The easiest way to think of it is like planting seeds for the future. So maybe you don't harvest it and won't go for business financing, but you have that option if you want to. I completely understand why some businesses might not want to leverage, but having that optionality is key. Number 2 is going to be separating personal and business expenses. At the beginning, this is mostly a sanity thing and also making sure you don't miss any transactions. In the future, it can be more useful and maybe even needed. At the beginning, when you're starting out, you're probably wearing a lot of hats and you have a lot of things on your plate. You might also still be working your 9 to 5 while you scale this up on the weekend. Having a business credit card means that you don't have to dig through your personal credit card statements in order to flag which ones are work expenses and which ones are personal ones. You can use personal cards, obviously, that's fine, but you're going to have to find which ones are specifically for your business. In order to do this, you want to be on top of your expenses and not miss anything. Imagine you had the Chase Sapphire Reserve and you had to look through your statement for all the transactions to flag the ones that are client dinners. Super easy to do right afterwards, but after the quarter, after the year, right before tax season, and you need everything done, it can be pretty problematic. There are alternatives like expense tracking software that you can use if you want to use personal cards. And in fact, that's kind of what we do with our own personal cards for bigger charges like travel, mostly because these are bigger transactions and personal cards have better multipliers. So in our case, we end up attaching the invoice to make life easier for future Sebby in the case that we ever get audited. If in the future the IRS is asking you why you're sending money to yourself 2 years ago or something, you want to be able to be like, hey, this is for legitimate expense. You're not paying yourself out a bonus. So there is software, but it does also cost money. You can also do a hacky version of this using something like Dropbox or Google Drive to upload all your receipts for your future self to reimburse yourself. Last thing you want is to forget about a legitimate expense. Given how taxes work, you don't really want to pay out of pocket for something that was incurred by the business and should be paid by the business, even if you are the owner because of double taxation. A bit of a tangent, but one thing to be careful with is personal expenses on business credit cards. You can do this. There are reasons you don't want to do it. We'll talk about that in a second, but you want to separate them out as owner drawings. One huge misconception is that anything that is on a business credit card is a business expense, and that's just not the case. The transaction itself and the nature of it still matters. So for example, let's say you end up using your business credit card to buy groceries. For almost all businesses, it's not going to be an expense. At the same time, if you were a private chef or maybe you had a cooking YouTube channel where it is part of the job and part of the business, then obviously that's fine. It's not the vehicle of the charge, it's the nature of the charge. Also, one of the really cool things with business cards is how it makes it super easy to link to your accounting software. So for all of our businesses, we use QuickBooks Online because it pulls in all these transactions from your credit cards and it makes it really easy to categorize them. So for example, QuickBooks Online pulls in your bank account, credit cards, and other services like PayPal. Let me know if it'd be useful walking through QuickBooks Online or how to set it up, and maybe I'll do it in a future video. Also, if you are new to QuickBooks and you want to check it out, go to asksebby.com/QuickBooks. Number 3 is earning rewards and benefits. Unsurprisingly, most business credit cards have categories that are optimized for businesses. Some examples of this include online advertising and also shipping. You can use personal credit cards, but you might be leaving money on the table. Another big draw is going to be the fact that annual fees can be written off for these cards. Okay, so why does that matter? There's a lot of cards out there that offer lounge access and other similar perks. Oftentimes, the business credit cards have the same exact annual fee or similar annual fees as the personal equivalent. Writing off something doesn't mean that it's free, but it does mean that it's a bit cheaper. Super fast example of this, but imagine if you had a business credit card that had an annual fee of $525. Since it's a business credit card, you can write off the full amount of $525, so the business pays $525. Super straightforward here. With a personal card, it gets super interesting. Let's say the goal is to get $525 into your hand as the end user. So $525 to cover the personal card annual fee. In order to do that though, the company might have to pay $700 or $800, and the reason for this is taxes. In comparison, that $525 annual fee personal card might cost a business $800. This can obviously be argued, but this is why legitimate business expenses can be pretty valuable. Okay, so how does it work for credit cards? Credit card fees are not deductible for individuals, but they are deductible for businesses. This includes fees, interest, and annual fees. One super fast rabbit hole, but if you do end up using your business card for personal expenses, then you do need to prorate this. So for example, let's say you spent $10,000 in total, but $5,000 was personal, and then you kind of book it as owner drawings. Business was only $5,000, so 50%, then that $525 annual fee should only be about $262. Main takeaway, it's super valuable for intro bonuses, multipliers, and potentially write-offs. On that note, if you do want to learn about business credit cards and support the channel, we do have links on the website, asksebby.com/business, and also down below in the description box. Make sure the cards make sense for your business, have good multipliers and good bonuses, but otherwise using those links is a huge way to support the channel, so thank you guys in advance. Moving into the mid-game, we have number 4, cash flow management. Once the business is more solid and more predictable, you can use this to grow faster. I would be careful here because this is how a lot of businesses end up getting wrecked. Basically only use this if it's something that's well known, something that is helping business operations, and that's already working. I would not use credit cards as a loan for speculative new ventures or a new product line. And to be fair, I'm sure that there have been people that have been successful taking that shot, but I would be careful about it and hesitant to recommend it. Basically use credit for something that is relatively low risk. In the mid-game, we come back to expense tracking with number 5. At this stage, it's not uncommon to use business credit cards the same way that we use personal ones. So maybe you have 1 or 2 cards specifically for ads, 1 for inventory, and 1 for office supplies and maybe internet. Kind of how we have different cards in our wallet for different transactions personally. And to be fair, you don't have to do this, but if you are in that position to have multiple cards, you might as well play the multipliers. For me at least, I feel like a lot of transactions end up being recurring, so it's set and forget. Another added benefit is that it makes bookkeeping a lot easier. And this is true whether you're doing it yourself or you're paying an accountant who's charging by the hour. Here, you're probably still using QuickBooks Online and you can link your credit cards to the system. If you're using a card for 1 or 2 specific categories, it becomes super easy to categorize. Even if you didn't want to overdo this, the one thing that I would separate is going to be dining just to make life easier. A lot of the other ones are going to be recurring, so pretty straightforward, but dining is annoying. The reason being that you're probably not going back to the same restaurants if you are going out of clients, and the naming conventions can be weird. For example, maybe you go to a restaurant and it's called The Office. A lot of systems might think that's an office supply store, but it's dining with a client. Also, depending on how much a business spends, this is a stage where people start to earn a ton of points. It might also make sense to go for cards that help you get elite status with a lot of spend. American Airlines and Hyatt are going to be on the top of the list, but maybe even Delta and United. Moving into the late game, we have number 6, which is access to business financing. This is why you might have wanted to build up business credit earlier on to have this optionality. So whether you're scaling up your business or doing more expansion, it can be key to doing a lot more, a lot faster. Be careful of this because it still needs to make sense, especially given the interest rates. If the numbers work, the idea is that you're taking low risk for moderate to high upside. For example, if you have a well-oiled machine, why not get 2 or 3 of them? Going back to expenses, we have number 7, which is employee expense management. A lot of the good business cards allow you to add employees for no additional cost. Lots of things you can do here. On the basic end, you can cap off transaction size to de-risk. With some startup and corporate cards, you can even do a lot more than this, like picking the categories. So for example, we use Ramp for one of our businesses, and you can generate virtual cards. Within these virtual cards, you have a lot of settings. You can name the cards, you can set the amounts, how frequently they can be used, and also restrict the categories and even vendors. If you are generating a card for expenses or for a marketing campaign, you can set it to auto lock after a certain date. Another pretty big one is going to be max transaction amounts. Basically a lot of fine tuning, which might not feel necessary, but I think is important to de-risk because you don't really want to give every single employee access to your entire bank account. Story time, but someone at Mandy's prior company basically took the corporate card and spent $30,000 partying in Vegas. So technically the company was in a position to get the money back, but now you pretty much have to either sue them for it and also report them to the police. For me at least, I'd rather avoid that entire thing by just making sure it doesn't happen. It's not about not trusting people, but it's about trusting them too much. Again, you can give people autonomy without giving them access to the corporate bank account and the keys to the kingdom. If you are using Ramp, there are a ton of automations that you can set up for QuickBooks to make life a lot easier. So for example, it can auto-categorize it to software. Less useful for a lot of smaller businesses that are probably bonus hunting, but if you are scaling up your business, then Ramp and Brex are pretty strong offerings with a lot of great tools. I think Brex is only now for venture-backed startups, but pretty good option if that is applicable, and then Ramp is still for everyone. I'm a huge fan of Ramp, and if you do want to check them out, go to asksebi.com/go/ramp. Also, Ramp does receipt matching, which can be super useful and save you a ton of money. All you need to do is forward them your receipts and they keep track of everything, meaning that you don't have to pay for Expensify. And in fact, if we had Ramp a few years ago, we probably wouldn't be paying $18 a month for each employee to have Expensify. As you can tell, I'm a huge fan of Ramp, and on the software side, it's S tier. Again, if you want to learn about cards, we have links on the website, asksebi.com/business, and also down below in the description box. If you made it to this point, leave a briefcase emoji in the comments down below and I'll try to heart it and also respond. Question for you is, why do you like business cards and what do you mostly use them for? Let me know and everyone else know in the comments down below. Big favorite, thumbs up, share this with friends, consider subscribing, but otherwise hope you liked it. See you next time.